anybody. You don't ever want to be in a position where you have to sell your property at a distressed price in a down market. Commercial real estate is cyclical with the economy. We talked before about the potential for over-leveraging and abusing that leverage. And like any asset, requires time, attention, and management. Anybody in here a Kramer fan? Anybody ever watch Jim Kramer, 6 o'clock, CVNBC? Okay. What's Kramer's rule about homework, Larry? An hour per week per stock, right? Something like that. Yeah. Well, you put that kind of effort in on your real estate, you're going to be very successful. And real estate markets are inefficient. You know, just because a property in Stamford, Connecticut meets certain characteristics, it may be selling for an entirely different price in Hartford, Connecticut. And that same property in Hartford, Connecticut may be selling at a very different price in Dallas, Texas. The markets are inefficient. And if you're a trader, there's this concept called arbitrage, and you're looking for the market inequalities. Now, the key to understand, though, is these disadvantages of commercial real estate are in large part only disadvantages to the new uneducated or lazy investor. For those of us that have experience, for those of us that know what we're doing, those of us that can serve as guides, you can exploit those to your advantage. I restate our basic thesis. Commercial real estate must be a part of every long-term investor's balanced portfolio. And don't forget, your house is not an asset. So, when is the best time to buy commercial real estate? This is excerpted from an article by Michael Bull, who's a commercial real estate agent broker down south, very successful. Historically, commercial real estate values have been cyclical. The availability and cost of financing is a key component to these cycles. Multiplicity of macroeconomic factors that affect them. The current bank failure rate actually equals an opportunity, creates a huge opportunity for us as investors. And very simply, to determine the best time to buy in a cycle, consider where we are in the cycle. There are 4 distinct phases. Phase 2 is the recovery phase. Things are beginning to get better. Vacancy rates are starting to go down, yada, yada, yada. That's still a very good time to buy. Phase 3 is the expansion phase. Now, see if this doesn't take you back to about 2004 or 5. During the expansion phase, real estate markets are progressing and expanding, and equity investors are plentiful. Financing is readily available, and the price of real estate may increase more than seen previously. Vacancies at their lowest points, and a general sense of well-being, prosperity, and abundance prevails. Everyone is talking about buying real estate. So very simply, it's a state of euphoria. Guess what? It's time to get out, guys. And the contraction phase, pretty much, contraction phase is where we're going from the expansion from the peak of the market back to the recession lows. And very simply, your decisions then have to be based on very specific property and investor criteria. For example, I just bought a property probably a little early in the market cycle. I was in the market this spring, but I was forced to. I had a 1031. I had 1031 pressures behind me and a very large tax bill and returns adjusted after the tax implications. I was still better off to buy even if I didn't quite get the bottom of the market. But you know what? You don't know when the bottom of the market's happened until after it's happened. Do you? There's no way to know. And then the other point is that even if you do know where it is, and if you know that the bottom of the market is 3 days from now, or 3 weeks from now, or 3 months from now, what's the opportunity cost of your money sitting on the sidelines for another 2 or 3 or 6 months to maybe get another 10 basis points on your cap rate? We're down at the bottom now, folks. Whether we're just past the bottom or we're just coming up on the bottom, I don't know. History will tell us. I mean, we all know economists are great at predicting history. I have a degree in economics, so I can make fun of us like that. The important thing here is that the phases occur in the same order each and every cycle. That's critical. The same order each and every cycle. The only variable is the depth and duration of the cycle. I don't think there's much question. This one was a little bit deeper and a little bit longer than some of them. But are you going to be a savvy decision maker, or are you going to run with the herd? The whole idea here is to buy low and sell high. The best time to buy is in the recession phase, and the best time to sell is in the expansion phase. I was at a doctor's office yesterday, my personal doctor, and he bought a property 5 years ago. And it was okay until last year when his investment banking tenant moved out. And now he's in a hurry to sell the thing. And I'm like, Doc, now's the time to fill the thing up. If you have to rent it a little bit cheap, rent it a little cheap, fill it up and keep it going. And he's like, I don't have the stomach for it anymore.
Well,
great, go ahead. But we talked about how inefficient markets are our advantage. There's a great opportunity. I mean, if I had the money, I'd be knocking on his door to buy the building. Very simple. Your basic financial model is the value of the building today is really little more than the net present value of that future stream of leases, adjusted for the credit risk of the tenants. It's almost that simple. So, our challenge. Our herd instinct is affected by the people around us, the media, and our resultant emotions. Do you think Katie Couric would tell you to buy real estate right now? If we were watching her instead of you would listen to me, flap my gums, she'd be probably telling you real estate's awful. Well, you know what? She's wrong. And I like Katie. I shouldn't be picking on her. She's cute. Very simply, when everybody else is talking about buying real estate, it's time to sell. When everyone else is talking about selling, like my chiropractor, it's time to go buy. Unfortunately, many of us let our emotions rule over our logic. So, in this time of uncertainty, and I think the uncertainty is starting to clear away. It's not going to be a straight line up, but there's certainly some indications. What was it Mr. Bernanke said on 60 Minutes a few months ago? Green shoots. We're seeing more than a few green shoots. So in this time of reduced uncertainty, one thing we can be certain of is that these cycles will continue to repeat. We know that. History has proven that those with the emotional fortitude and the financial ability to take advantage of these cycles will reap tremendous, tremendous rewards. So let's go to some basics here, and I apologize for those of you that are investors. Some of the basic types: single-family residence, 1 to 4 family. We met last week up at CTREIA, and that's pretty much the stuff they're talking about, or maybe a little bit up and getting into multifamily, small apartment houses, multi-unit facilities. From there, you can look at resort and leisure, hotels, motels. Don, have you ever been to a golf course? And, of course, office. There are a variety of end users, a variety of submarkets. Major medical facilities are very in vogue right now. Obamacare is probably going to happen in some form. Obamacare is probably going to pump more money into the medical arts. The doctors trying to get the doctors can't make the money they used to, so they're trying to get a bigger piece of the pie by investing in their own MRI facilities, their own surgical facilities, and those kinds of things. And there are some very, very nice properties out there. We just looked at a property about 3 weeks ago in Winter Park, Florida. $6.8 million, $6.9 million. Came with a 20-year note, 5-year fixed tied to LIBOR at 5.2%, paying the asking cap rate was an 8.9%. There's some really sweet stuff out there.
That was gone in about 2 weeks.
Yeah, it was. I mean, the old adage that real estate isn't selling. If it's priced right, if it's a quality property and it's priced right, it moves, and it moves quick. I've seen 2 properties like that move just in the last 3 weeks. Retail, there's a variety of retail alternatives. You have the malls. The malls have had a tough time. Could be an opportunity if you're a big enough player. I'm not. We're not. You have the big box retailers, the Home Depots and Lowe's and Bed Bath & Beyond. The big box stores, and particularly fast food restaurants, the Dollar General or the McDonald's is a bad example. The Captain D's and those kinds of things. They're often marketed as triple net leases. You buy the building, pure triple net lease. The tenant takes care of everything. You get your check every so often, and away you go. And my personal favorite is the strip shopping center. And the reason I like strip shopping centers is, very simply, you can put an office application in a strip shopping center. You can't put a retail application in an office building. So it gives you a much greater market and cadre of people to rent to. And then, of course, there's a variety of industrial and purpose-built, flexed mixed buildings. There's a cool little industrial building now up in Milford, about not even a mile off the thruway. Building is 16 or 17 years old, and it's selling for their asking price is for an 11 cap rate, 11% dividend on your money.